turn to policymakers in China now because they've managed to cool inflation without hurting the economy. GDP growth has slowed to 9.5% last quarter from a year earlier. That compares to 9.7% gain in the previous 3 months. Now, economists had actually predicted a bigger slowdown after all those interest rate hikes. Well, let's get more now on this with Vishnu Varathan. He's Asia economist at Capital Economics, and he comes to us from Singapore. Good to see you, Vishnu. So should this allay concerns about a hard landing altogether?
Well, I mean, the numbers today definitely alleviate some of the fears about a hard landing. And in fact, it is quite consistent with our view that China will successfully achieve a soft landing. The year-on-year numbers, I mean, as you rightly noted, was slightly higher than the consensus, whereas Q-on-Q seasonally adjusted numbers, this is a relatively new series that's yet to be tested. But it shows that growth actually picked up slightly. Nonetheless, we don't think that this will actually spur PBOC to go ahead with further interest rate hikes for several reasons. One is I don't think the numbers today actually highlight overheating risks as much as they do alleviate concerns about a hard landing. And the second thing is the policy rate at the end of the day is more a signal than anything else. So what we are looking for is 2 more 50 basis point hikes in the repo rates. That is also to partly address the problem of accumulation of money quantity in the economy, and so of course sterilization will require that we see further rate hikes there. But apart from that, we expect inflation to begin to soften later this year, and when it does, I think there will be scope for policymakers to actually loosen credit policies.
Why would they do that? I mean, you still have 9.5% growth is still pretty mega. I mean, aren't they in danger of being behind the curve here?
No, that's not exactly our view, and here's why. I mean, there are there are myriad indicators that we could look at. But if we looked at a lot of the indicators, such as the PMI indicators, that shows that output, headline, as well as new orders have slowed substantially. And this ties in with a lot of leading indicators, as well as our own proprietary activity indicator that shows that the sequential growth momentum in China has slowed considerably. So that means that China would want to play a very balanced hand here. They don't want to overly tighten the economy because growth is still important. And so we think that despite the headline numbers today, there's actually scope to begin easing the policy slightly next year if such a need arises.
What kind of growth are you looking for in the third quarter and the fourth quarter from China?
It'll be around, thereabouts, around 9% type of growth in the third and fourth quarter. But what we'd like to actually pay attention to is the seasonally adjusted Q-on-Q numbers. Our own estimates have suggested that it may be closer to 8% on an annualized basis in Q2. So we want to watch that one carefully to see how growth actually evolves, because base effects can actually distort the year-on-year numbers.
All right, Vishnu Varathan, we're going to have to leave it there from Capital Economics. Thanks very much for being with us.
Thank you.